Welcome. Today we are talking about profit and loss statements. In accounting, we often are told to consider financial statements of a company. A financial statement, if we think about the words, is a statement or document that is looking at the finances of a business. There are two main types. The first being the profit and loss statement, which we will be considering today, and the second being the balance sheet, which will be considered in the next presentation. So, a profit and loss statement. This title tells you everything you need to know. It is a statement or document that is telling you if your business made a profit or a loss. In the profit and loss statement, you'll find that it is for a specific period of time. So often it will say it's for a year or a month, and that tells you everything that happened in the business that would have contributed to the profit or loss gained during that time period. We look at the revenues earned, not cash received, as well as expenses incurred, again, not cash paid. Specifically, we are looking at what happened during that time period, and we are not worried about when the cash was actually received or paid out. So, to get started, we need to look at our revenue. In our profit and loss statement, we are only considering our revenue income, not capital income. If you don't remember the difference, our revenue income is money we've earned during the period by doing business, doing the activities that define our business. So, if we sell t-shirts, our revenue is the money we receive from selling t-shirts. We would not include things like a bank loan or money that friends or family invested in our business. It's only our revenue. As you can see, these are some of the items that we often consider income. However, most of these are not revenue. As I mentioned, our owner investments, our bank loans, our mortgages are not revenue. However, our income from selling buttons, income from cleaning windows, or tips at a restaurant would be considered revenue, and these would go in the revenue section of our profit and loss statement. Our revenue section can also be called trading accounts. Both words are used interchangeably, and so you need to be able to recognize either. This is an example of a business's trading accounts where we're shown all the different types of revenue they receive. Most businesses do not only do one thing. For example, at this arcade they sell food, they have the arcade games, and they also provide some sort of entertainment. In this statement, they've split these out so we can see the details of each, and then giving us our total revenue at the end. Now, expenses. We have two main types of expenses that get shown on the profit and loss statement, and we have to make sure that we categorize them correctly. The first is something we call the costs of goods sold. Again, think of the words. The cost, so that's the cost to the business, of goods sold, of the items that we are selling, of the things that we sell to do business. So our costs of goods sold are the costs incurred in order to produce the product or provide the service that results in the revenue. These would include the price we pay to buy the t-shirts that we then sell at our shop. Okay? It could include the wood that we need to purchase to be able to make the furniture that we sell in our shop. It could also include things like the shipping costs, the packaging costs, all the things that we need to pay to be able to make and sell that product or service. Our second category is basically everything else. We consider these our overheads or just expenses. Okay, these are things like your rent, your electricity, your telephone, your internet, all the things you need to pay to do business, but that do not directly go into making of the products. Okay? Wages can be a tricky one when categorizing them. Generally, we say that wages fall under our overhead or expenses unless the wages we are paying are specifically for creating that product or service. So, If you are paying a worker who is working on the wood and turning it into furniture, that would be a cost of good. However, when you pay your accountant or your secretary or somebody that answers the phones or a sales associate, those would be considered overheads and expenses. Okay, so in this example, we sell pens. Okay, so the actual ink that we use to sell our pens, that is something that we would consider a cost of good. It goes into making the pens. Our rent would not. It is an overhead. The salary of our receptionist, again, she doesn't work on the pens, so that would be an overhead. The plastic to make the pens, however, would be a cost of goods sold because that is a cost we're incurring to make the product we're selling. Our telephone and our insurance on the building would be considered overheads, but our packaging for the pen would be a cost of goods sold. There are two ways that our cost of goods sold can be represented on our profit and loss statement. The first being a very simple line showing us our total cost of goods sold for that year. So this would include all the costs that we incurred to make our product during the year. Some companies would like to split it up, especially when they're purchasing their items. They look at what was left over from last year, they add to it all the things they purchased this year, and then they subtract from it anything that's left. Because anything that's sitting in our inventory is not a cost of the goods we've already sold, it will be a cost of good for the future, giving us our total cost of goods sold. Our expenses or our overheads are simply listed out. We like to see the detail. We want to know what was rent, what was insurance, what was telephone, and then we have a total at the end. So profit. Our title of our statement is a profit and loss statement, and so we should be seeing it in our statement. So far we've included our revenue, our costs of goods sold, and our overhead or expenses. Also in the statement, there's actually two representations of profit. The first being gross profit. This is calculated by taking all of your revenue and subtracting from it your costs of goods. We like to see this profit representation because it's really showing us how much money we're actually making by doing business, doing the thing we're in business to do. For example, if I were to buy t-shirts for £2 and then I sold them to my customer for £5, we would be making a gross profit per t-shirt of £3. This is how much we're really bringing into the business each time we sell a product. Okay? However, it is not our overall profit. We still have our rent, we still have our insurance, our telephones, all those other costs, so it is somewhat untrue. And that is why I like to think it's called a gross profit. It is gross. It is lying to us. It is not a true representation of how much money we're making. So we also have something called net profit. When we see the word net, we like to think this is our final amount, our overall. So our net profit is basically our true profit. That profit that I was saying, gross profit is not. To get our net profit, we can take what we've already calculated as gross profit and deduct from it all those extra expenses, all those other things we have to pay money for to be able to run our business to get our true profit. If we hadn't already calculated gross profit, we would simply take our revenue and subtract from it both our cost of goods sold and our expenses, or just everything that we spent money on this year. So, now that we know the elements of a profit and loss statement, we need to put one together. The structure of our statements is very, very important. Our title or our heading, before we get into the numbers, needs to include your company name, followed by profit and loss statement, so we know what type of statement it is, along with the date. For a profit and loss statement, it needs to be arranged in the format of for the and then time period, so in our case year, ending, and then the specific date that the year ended on. So for example, it could be for the year ending September 30th, 2012. The actual data in our profit and loss statement is arranged like this. We start with our revenue, and we subtract from that our costs of goods sold. Remember, it can be arranged in a multitude of different ways as shown before, but it is always in this order, and it is always subtracted from revenue, which then gives us our gross profit, which is listed on the statement. We then list all of our expenses, total them up, and subtract them from our gross profit to give us our net profit, which is always at the very bottom of the statement with a double underline underneath. This has been an overview of the sections and the structure of a profit and loss statement. If you'd like to see one actually put together, please continue on to the next video.